please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Alright, so those are all the stocks that we will be looking out for. The Nifty has now moved into the green, so watch out for that. And other than that, let's see some of the stocks which are moving on high volumes. So, CG Power, of course, remains top of mind. Very, very high volumes over there. Prakash Gaba also now joins in for a quick technical check. Prakash, hi, good morning to you. Does it look like there's not a lot that's going to be happening through the day today?
Good morning. I don't think there's much happening. If there's happening, it is happening on the downside. So it looks like we had a target of 10,822 and opened somewhere closer to that and climbed up, but did not even go up, which tells me that there's weakness. So there's a resistance zone, was a resistance zone, selling pressure did come in there. We may see a downside to maybe around 10,750 is a possibility.
All right, 10,750 or 15?
Yeah, 50.
50, all right. And on the Nifty Bank, Prakash, it's the weekly options expiry. What's your view?
I think 26,450, 475 is an area I'm looking at. Any rallies that we may get on Bank Nifty would be a shorting opportunity. What we saw yesterday, Mangalam, was more of a short squeeze. And today it opened the gap up and sold out. I think it's down here.
Individual stocks?
Two stocks and both on the shorting side. One is Dr Reddys, certainly looks weak to me. There's selling pressure in the upper regions. Can see a slide to around 2280, stop about 2380 should be fine. And another is SRF. Here too is broken down structure, has been seeing selling pressure in the last couple of days. Looks like it can see a slide to around 1750 zones, stop about 1850.
All right, Prakash, thanks very much for your trading ideas. Let's take stock of what's happening in the commodities space, because that crucial OPEC meeting is slated for tomorrow. Manisha is here with a quick roundup. Manisha, over to you.
Thank you so much for that, Sumaira. Well, yes, the OPEC interministerial meeting is slated for today. You have OPEC meeting tomorrow, and the OPEC and allies meeting is happening on Saturday. So all of that action really begins today in Vienna. All the oil producers, ministers, consumers have gathered in Vienna, and we will see that beginning of meeting today as well. While, of course, Russia and Saudi Arabia have been talking about increasing oil production, you have other countries now agreeing to a modest rise in supplies, and that's bringing the crude oil prices on the weaker side. So nearly 0.2% lower is what we can see on the charts right now. It did see some profit taking in the New York session as well. So beginning today, the kind of statements you hear from Vienna will really decide on where the crude oil prices are headed. But it is a decline that has continued for the gold and silver prices. Gold is trading at a 6-month lows now. Once it broke below $1,300 per ounce, it has been constantly making lower lows, and we have seen a breach of 1270 on the lower side as well in the Asian markets there. The base metal prices, while the overnight session was negative, we have seen some buying come in, and this is after China has indicated that they are looking at some policy reforms to support their market. Remember, all the data that came in from China for the month of May has been on the weaker side, whether it was retail, industrial output or exports as well. And of course, the spat with the US that has been ongoing has been bringing the Chinese numbers on the weaker side. So some policy changes on the cards on this week itself is what has led a lot of support in all of those metals on your screens. Trading strategies, and we have them from Grow Value. They have a couple of buy calls in the metal space, especially in case of copper and nickel. For copper, they're looking at upside targets of 468. They have a buy in nickel as well, where the prices already are up by a percentage point, 1,036 onto that. A sell call, though, on lead is what they are starting or planning their day today.
All right, Manisha, thanks a lot for that. We will definitely watch out for that OPEC meet as well as how crude behaves. But with that, we'll slip into a short break, come back. Dhanuka Agritech, that stock is on our radar. There was a CIMB report that came out earlier this morning.
Hi, welcome back. Well, as we welcome you back, all the key indices are now in the red. So even the Sensex now about 12 points lower. But let's talk about one of the triggers for the day. And in fact, we understand that the SEBI board is set to meet today. So Yash Jain joins in with what's likely on the agenda. Yash.
Well, Sumaira, of course, the SEBI board would be meeting today evening and would have some crucial discussions on 3 important fronts. The first one is on the IPO and the capital markets. The second one on MII or market infrastructure institutions. And the third one being on the buyback regulations, which currently we have. Starting with the first one, the IPO regulations, some significant overhaul and relaxation might come for companies who intend to go public, and essentially with an intention to continue the momentum which we saw in the IPO market in 2017. Here we are given to understand that SEBI board might mull the whole proposal of reducing the period for IPO timeline, the price band disclosure to 2 days from the current 5 days. We are also given to understand that they might reduce the period of financial disclosure as well to 2 years from the previous 5 years for the IPO launch. Also, one very important update here is that SEBI might form a committee to monitor each and every IPO which hits the capital market. Remember, earlier this committee would only monitor IPOs of value over 100 crore. Second one on MII or market infrastructure institutions. These are exchanges, depositories as well as clearing corporations. Here we are given to understand that SEBI might bring a harmonization when it comes to the shareholding of the foreign entities in these MIIs. We are given to understand as currently it stands that the foreign entities are allowed to hold 15% when it comes to exchanges and 5% in depositories as well as clearing corporations, and there could be a uniformity which could be brought by market regulator on that front. Also, we are given to understand that the board might consider the proposal of capping the tenure of exchange MDs and CEOs. Of course, BSE, NSE, MD CEOs is what we are talking about. As far as the buyback regulations are concerned, some simplification in terms of the language and the disclosure period might come here. We are given to understand that SEBI might push for a simplification of language and removal of inconsistencies when it comes to the buyback. Also, it may mull providing clarity on the definition of the buyback period and the public announcement factor involved here.
All right, Yash, thanks a lot for that. I think we have the management of Dhanuka Agritech with us. Yes, we do. CIMB, a brokerage, remember, believes that major agrochemical companies likely to disappoint in FY19. They've also maintained their reduced call on Dhanuka Agritech. So to discuss this, along with the outlook for the company's business in the next fiscal and industry, we are joined by RG Agarwal, the chairman of the company, on the phone line. Thanks a lot, Mr. Agarwal, for joining in. So brokerages believe that, you know, FY19 will be another bad year for agrochemicals, and this is on the back of falling prices for soya bean, which they believe is going to be a headwind. Do you concur with that view? Because last year was quite listless, just about 2% decline on your revenue as well as EBITDA, just about 3% growth on your bottom line. Do you think this is another listless year for the industry and your company?
No, this year is going to be a bumper year.
Okay.
Because the monsoon forecast is very good. Secondly, government from this 18-19 Kharif season has announced to pay 50% on the farmer's cost. So that way, government is going to implement. And the problem which we are talking of soybean prices last year, we do hope that due to recent even America and China, trade war, soybean supply may slack. And Indian farmers is going to get much better price for soybean. Not only soybean, there is government policy on 24 crop to give farmers cost plus 50% as per Dr. Swaminathan Committee recommendation. In my opinion, it will be a boost for the agriculture, not only agriculture, but all the related industry with agriculture.
Okay. Mr. Agarwal, good morning. Sir, thanks very much for speaking with us. So, you know, if we work with the assumption that FY19 is going to be a bumper year, one, what are you expecting in terms of your overall revenue growth? And B, could you tell us where you think the prices of soya bean might trend? I think FY18 was about roughly 1,600 odd.
No. Soybean prices, last year government MSP was 4,000 rupees, and even yesterday our Honorable Prime Minister was having discussions through app with the farmers, where also he assured that by 2022 farmers' income will be doubled. So we are sure that from this Kharif season, as promised by government, they will be paying cost plus 50%. And oil we are importing, and we hope government may take care to put some safeguard duty on oil imports, so oil prices will improve in the country.
So 4,000 per quintal is what you're saying, sir?
Yes, 4,000 per quintal.
All
okay,
right.
16,600 Because you might have sent per month or for 40 kilos.
Yeah. That is perhaps what we may have had with us in terms of numbers. But in that case, can you also tell us, FY19, you're saying it's going to be a bumper year, Kharif crops as well as the government's focus on rural is doing fairly well. For your company and your industry, if you could tell us how the revenue mix is likely to change. I believe 50% of your revenues comes from specialty products, the other 50 comes from generic. Is that mix shifting in the favor of specialty? What can we expect in FY19 and FY20?
You see, we expect to maintain the same ratio because this year, one thing that from China, thousands of factories have closed, and India was mainly dependent on China for pesticides, technical as well as intermediates on China. And for some chemicals, even prices has gone more than double. So that way also revenue growth will be there. And we expect same ratio in specialty and generic, but expect 1-2% additional growth in specialty products.
Okay, and Mr. Agarwal, finally, if you could tell us your outlook for FY19, sir, what you expect in terms of revenue growth, what margins might look like?
Minimum, we are expecting this year 15% growth. I'm talking minimum.
Minimum 15% revenue growth.
Revenue growth.
All right.
And EBITDA growth, whatever we got shortfall last year, we hope will cover in this year. And the EBITDA growth which we were having in the 16-17, we hope this year will have similar growth.
Okay, so your margins will be around that 17-18% mark, or they will improve?
No, improvement will be difficult, but it may improve also.
Okay.
But we will not like to improve as government policy to support farmers this year and make them products available at competitive price. So we like to maintain same margin, not to improve our margin.
All right, fair point, Mr. Agarwal there. Thanks a lot for joining in and clarifying on the fact that perhaps you expect this year to be a bumper one, and 15% revenue growth minimum is what he's guiding for in terms of FY19. With that, we'll step into another short break, get you an excerpt of the chat our colleague Shireen Bhan had with the SBI chairman Rajneesh Kumar on bad loans on the other side. Welcome back. Just keep an eye out on a couple of these FMCG stocks. They're seeing some bit of, security seeking perhaps, or safety seeking as we speak. Nestle is at the high point of the day. We have Berger Paints and Godrej Consumer too, which have moved to the high point of the day in an otherwise choppy market with a slender range. Apart from that, we have PVR. That one too has recovered from the low point of the day, now has moved into the green. So keep an eye out on these individual pockets which are seeing some bit of purchase. But we'll talk about the Finance Ministry, who will hold a meeting with the lenders to the power sector today. Anshu Sharma joins us with the details. Anshu, what is likely to be on the agenda?
So let me tell you, give you the background. Allahabad High Court has stayed the RBI circular of February 12th, which meant that even a day's delay in payment by the non-performing assets will lead to resolution. Now, on that Allahabad High Court order today, Banking Secretary is meeting all the stakeholders on the order of Allahabad High Court, and he'll be meeting power companies, NTPC, REC, PFC, industry associations, and Power Ministry officials, along with bankers and RBI. So the government has to firm up its stand on what will be the decision with regards to the Allahabad High Court order. It means that the stress in the power sector, which is over 2 lakh crore, the idea is to take a stand on the Allahabad High Court and see what stance the government will take. So it is an important meeting where all stakeholders will put up their views on the one-day delay in payment with regards to power companies. Back to you.
All right, Anshu, thanks much. We'll touch base with you post the meeting to find out what has transpired. But for now, we bring you a CNBC TV18 exclusive. Rajneesh Kumar, the chairman of India's largest lender, State Bank of India, has advocated the need for a strong asset management company to tackle the menace of bad loans which are plaguing PSU banks at the moment. Here's an excerpt from his chat with Shireen Bhan.
There are a couple of ARCs, and It's also not about setting up a new ARC. But there are various models available where it is being felt that we definitely need a strong AMC. The country lacks one. There are funds who have their own AMCs, but an AMC which can manage, say, for example, the assets in the power sector.
Right.
It requires a specialized setup to manage these assets if it was decided that these assets, we don't want that they be referred to NCLT and there can be a resolution even outside the NCLT framework, because many of these assets, there are PPAs available. Even there is a fuel supply agreement, but still they are not operating at the full capacity.
Right.
So in such a situation, if banks decide that these assets definitely need to be taken out of the bank's books, and we need a very strong agency who can manage these assets, and that would mean the operators likes of, say, NTPC, or it can be Tata Power, or it can be a Semcorp. There are a couple of agencies who have the experience of running the large plants. The idea is that within 2 years or maybe even earlier, we may see a situation where the demand for power and the generation capacity will be fully matched, or rather there may be a shortage. And at that stage, the value of these enterprises will be much higher than if banks do any distress sale today. So this is the whole concept. And so, as I said,
is my understanding correct from what I hear from you that the priority at this point is to address the assets in the power space, and so this ARC or AMC, as and when it is taken forward, will address these assets to start with?
Maybe that would be the good beginning point, but the idea ultimately would be that we have the capability to manage the stressed assets. Currently, the ARC structure which is existent in the country, I am finding that that structure is missing. So the requirement is not as much for an ARC maybe, but there is definitely a requirement in the country for having an AMC.
So you're saying not so much an ARC, but an AMC, an asset management company.
And the alternate investment fund.
Okay.
So the possible structure could be AMC, AIF, ARC.
Okay.
But these are all the thoughts, because these are coming from various people who are in the stressed asset resolution.
Okay.
And Mr. Mehta, who has been appointed as the chairman of the committee to look into all this, so he is consulting all the people, including the ARCs, existing ARCs, that what should be the way forward, because ultimately the whole objective is that there are assets which can be resolved.
Okay.
And identification of those assets, and then make a serious attempt to resolve those assets.
All right, meanwhile, the market's still trading absolutely flat, a little choppy with a narrow range. Just keep an eye out on individual stocks. We have Avenue Supermarts. That one's moved to the high point of the day, and with good volumes as well. Nearly 1.5 lakh shares have traded already so far. So that one is the one that's swum into my ken, but can't really find any other individual stock which has seen a bit of spike or a decline, apart from maybe something like an ONGC. Sumera, you were pointing out to that. I believe, you know, the reason why I used the word slender was subconsciously, perhaps also because it's the yoga day.
Yeah, that makes sense actually. And we'll wrap up then on Chartbusters. And as we do that, from our entire team here is wishing you a very happy International Yoga Day, and we hope that you use it to have a fitness resolution going ahead. Thanks for watching.